By 2022, Silicon Valley Bank had grown into one of America's most powerful banks, with roughly $209 billion in assets and about $175 billion in deposits from tech startups, venture capital firms, and innovators fueling the digital age. However, in March 10, 2023, in just 48 hours, Silicon Valley Bank went from thriving to insolvent. Hi everyone, thanks for joining us today on Everything in a List. Today we will be covering the story of Silicon Valley Bank. Let's get to it. Founded in 1983, Silicon Valley Bank wasn't built for ordinary customers. It was built for startups, venture capital, and tech founders, the riskiest dreamers on earth. By betting on innovation, SVB became the bank of the tech boom. It backed nearly half of all U.S. venture-backed startups, helped fund IPOs, and rode wave after wave of tech success. Then came the pandemic. Tech exploded, money poured in, deposits tripled, cash piled up faster than the bank could lend it. So, SVB did something that looked safe. It invested tens of billions of dollars into long-term U.S. government bonds and mortgage securities. Slow, steady, predictable. What could possibly go wrong, right? In 2022, inflation roared and the Federal Reserve fought back. As rates soared, the value of SVB's long-term bonds plunged. On paper, the bank was sitting on massive unrealized losses. And at the same time, tech funding dried up. Startups stopped raising money and started withdrawing cash to survive. To stay liquid, SVB sold $21 billion in securities and locked in a $1.8 billion loss. To plug the hole, it announced plans to raise $2.25 billion in new capital. But instead of calming investors, it terrified them. Within 24 hours, fear went viral. Venture capital firms warned startups to pull their money, and they did. $42 billion withdrawn in one day. It was a digital stampede, the fastest bank run America had ever seen. By March 10, 2023, the bank was out of cash. Regulators shut it down. The FDIC took control. Nearly 89% of deposits were uninsured, leaving founders terrified that their payroll and their companies could vanish overnight. It became the second largest bank failure in U.S. history and the biggest since 2008. Markets trembled, other regional banks wobbled, governments rushed in to stabilize deposits and prevent contagion. Investigations began, strategies were questioned, and Silicon Valley Bank, once the heartbeat of innovation, was now a warning story. SVB's collapse wasn't greed alone. It was concentration risk, bad timing, rate shocks, and panic amplified by technology. In a world where billions can move with a tap, banking isn't just numbers anymore, it's confidence. And once confidence breaks, even giants can fall. If you enjoyed this rise and fall story, hit like, subscribe, and tell me which collapse you want next.